What is up, guys? Welcome, welcome, welcome. Happy Friday, guys. Let's jump right into this. All right, we're good to go. All right, perfect. Just making sure the stream is good. We're good to go. What is going on, guys? Welcome. Crypto FUD. Happy Friday. We're having a good day. Let's jump right into this, guys. All right, let's do this, guys. So, if you guys are living under a rock, we had a big day today. We've been talking about this all week. Unemployment did come out today. Let me see if they have our numbers here. So unemployment did drop today. And just like we expected, unemployment came in a little higher than what they were, or actually what they forecast, higher than previous at around 4.3%. And this is exactly what we were looking for. Unfortunately, right? And I say this unfortunately, the market is looking for a weaker labor market, and that's exactly what we saw today. Unemployment came in from 4.2 previous to 4.3, and what's crazy is the jobs for last month came in, I think, at 27,000. If you guys comprehend how much that is, it is crazy to see that the market has so low of unemployment out. I'm sorry, not unemployment, but jobs being created for this last quarter, this last month. It's just absolutely insane. Gina, what's going on, girl? What is going on? Let me check something. Something's wrong with my program here. It looks good. Troy, what's going on, bro? Pumped to the moon. See, it's telling me no one's here, but obviously I see you guys here. I don't know what's going on with my program. Yeah. Always technical difficulties. I'm going to have to start using a different streaming service because these people are slipping. All right, well, let's just jump. Let's do this because I don't want any distractions here. So Bitcoin obviously rallying off unemployment today. Like I said, unemployment did come down, or did come up. Keep wanting to say down. Did come up. What forecast, what we were looking at, 4.3. So the markets are actually loving this. So you can see before the market kind of opened up, we already kind of knew that we were going to get a weaker labor market, numbers as far as, like I said, 4.3%. So you can see the market actually ran up to about 113.3, 113.4 for Bitcoin. Ethereum finally broke above that 4,400. For Ethereum, you can see I've said this all week, that 4,500 is going to be the spot that we are looking to break. You can see we actually keep coming right below that 4,500. It looks like we hit our head at 3 times at 49.91 on my chart. But you guys get the gist. 4,500 is going to be that spot that we need to break back above. And I think once we finally see that 4,500 Ethereum and more, and if we can find that support above it, that's going to be the more pivotal thing is really finding support above that 4,500. I think we're going to be solid. You'll start to see dominance start coming back down, and you'll see Ethereum and alts start moving fast up. As far as today, though, looking at the across the market top 100, everything looks great. Everything looks fantastic. Nice green across the board. Troy, your pumps up another 6%. They've been doing fantastic. I did mention this whenever they dropped. What was it, like 2 months ago? I said just to be cautious, let it kind of level itself out. And then I wouldn't be surprised if they start moving towards the upside. And that's exactly what they've been doing. They've been slowly but surely moving towards the upside. So definitely looking good. But across the board, the market looks fantastic for today, guys. Looking at fear and greed, we are sitting at neutral, which, like I said, we dipped into fear slightly. And I mentioned this yesterday. Not yesterday, but a few days ago, I mentioned a couple things. Buying in fear usually does really well. So you can basically take that. 2 days ago when we had the last stream, we were in fear, right? Everything across the board is at least up 5 to 10% from just from 2 days ago, right? So just from 2 days ago, if you were to buy in that slight little fear that we were in, you should be up just from those little buys that you bought 5 to 10, maybe even in some cases up more than 10% right now. I mentioned this in the members only stream. I don't know if I mentioned this on the regular stream, but the average crypto RSI, as of just a few days ago at the beginning of the week, we were in oversold territory, which was kind of goes hand in hand with your fear and greed, was another indicator of a buy, right? It was a good buy for whatever you were buying. And like I keep saying, that's exactly what we're seeing for today. A nice bounce, nice move towards the upside. Do I think that we are completely out of it? I'm not going to say completely, as far as us, that was it. That was the dip that we were looking for. And it's all going to be just, green skies or blue skies and just green charts, for the next, 12 to 16 weeks. I don't necessarily believe that. We are still in September. We're not even out of the first week, guys. So just be cautious. Right now, you guys can see as far as September, as of earlier, we are technically up. This is for Bitcoin, about 3.78%. So we're technically in the green for now, right? We'll see how this plays out. We did, like I said, I pointed this out yesterday on the Discord as well. If you go to the daily on Bitcoin, we were in, and I'm sure we probably still are. Let me see. Yeah, we still technically are. You can see I pointed this out yesterday on in the Discord, that we were in some oversold territory on the MACD for the daily on Bitcoin, right? And you can see a lot of times we will break below this it tends to be like a support level for the MACD as far as oversold. You can see we will dip off, right? And we'll get below that level. But a lot of times, pretty much every time we do break below this certain level, it usually tends to call for, even if it's a short term, kind of a buy the dip moment, right? And you can see, if you fast forward, we broke down below that line, that support level, and now you're starting to see that flip in the MACD, where it's looking like we are still technically in some oversold territories, but on the daily, because this is a lagging indicator, it looks like we might be on towards a good run, maybe potentially, if things can hold for this week coming up. And I mean, this week, not this week that we're in, but this week coming up, because obviously we only have, even though the market's just opened up, we only have for today. We're going to go into the weekend. A lot of times the weekend, you guys know how it goes. For the most part, it's just low volume, not much going on. Kind of what we've seen all week. This week has been kind of, I don't want to say boring, but price action's been pretty just like meh. Where it really hasn't been anything really going on. And we see that time to time, right? We can't just have rally over rally over rally or massive dips consistently. There's going to be times where it just gets kind of looking at an ocean, it's just like smooth sailings as far as like the water's just very calm. And that's pretty much what we've seen for this last week. Just kind of calm waters, waiting. It's kind of a setup to see where we're going to be heading. Are we going to see this explosive move coming up, or are we going to see some more downward movement? I will say there's some big things going on here. One, if you guys can see, this is the September Fed meeting coming up in literally less than 2 weeks from now, right? You notice how something's changed here? If you guys remember, just yesterday, this past week, it's been about 90%, it's been fluctuating that we were going to see some kind of a reduction in interest rates, right? Well, look what's happened. It actually, I'm going to explain this chart real quick. It actually, now investors aren't even questioning if there's going to be a reduction in interest rates. Now, it's gotten to the point where 88% of the market's saying, yep, we're going to see that quarter basis point. It's pretty much solid. But we might actually, 12% of the market saying, we might actually see a 50 basis point coming up. And you can see how it shifted. So 88% of the market right now is anticipating that we're going to see a quarter basis point, right? Kind of that mild, just start reducing interest rates. We're not going to go too aggressive. But you have now, it's starting to tick up. You have about 12% now thinking that we're going to see at least a 50 basis point reduction. That would be, like I told you guys, we talked about this 2 days ago. If we see an aggressive Fed where they're coming out and they start aggressively reducing rates, you're going to see this market 100% flip towards the upside, and you're going to start seeing us move fast, right? This might be the setup for that, blow off top that we've been talking about in October and November. This right here could easily catapult us in there. So, I mean, it looks great right now. There's not even a question of if we're going to see any kind of, if we're going to see a pulse. It's 100% the market is basically like, the question is how much, right? And I said this for October and December. The markets aren't the markets aren't trying to determine, are we going to see a reduction? The markets are determining how much of a reduction we're going to see. And the Feds, I mean, the market is really running with the Feds reducing rates for the next three meetings, basically for the rest of this year, which, like I said, will give us that catapult, give us that, that run that we need to kind of flip this market. Because if you notice, the market, you can't really say this market is bearish, right? You really can't say it's bearish. I mean, Bitcoin just, 20 minutes ago was sitting at 113,000. We are seeing a little bit of a sell-off right now. But the point of the story is that you can see this nice little sell-off that we're having right now on the hourly. But the point of the story is the markets right now, Bitcoin sitting at $110,000. That's very bullish. I mean, that is very bullish. Obviously, we've come from 125,000 very briefly, but we are very bullish right now, guys, right? It might not feel like it. But I mean, you really need to just sometimes look at the charts. Don't look at them. We're looking at the hourly right now, but sometimes it's better off to look at some of these charts from like the daily, the weekly, the monthly, and really see how much we've progressed in the charts in the last 6 months, 8 months, in the last year, especially like Ethereum, right? I mean, just a few, like literally just 8 weeks ago, Ethereum was sitting around $2,500. So Troy said, Milady's actually moving a little bit. Craig, what's going on, bro? Milady, yeah, I mean, she's up 2%. I mean, the whole market's kind of up like 2 to 5% right now. If you see everything in the green over here, if I'm not in the way, everything's pretty much just in the green, like 2 to 5%. Bitcoin having a little bit of a sell-off. I'm wondering if people are just, kind of we're buying the rumor, selling the news, particularly. Let me see. The stock market actually just went into the red as well. I wonder if there's something going on right now. Let's see. Let me load up this Twitter real quick and see. Something might be going on here. Just 1 minute ago, Justin, President. Oh, here we go. So President Trump speaks on Fed chair saying Powell should have lowered rates long ago. So Jerome, too late. Powell should have lowered rates a long ago. As usual, he is too late. Why, bro? Stop talking. Why are you saying shit, bro? Do you guys notice when he attacks Jerome Powell, look what happens. The market sells off. Flip, what's going on, bro? Someone needs to sit next to him and be like, sir, please don't, just leave Jerome Powell alone. Please, the markets do not like it. Please, just leave Jerome Powell alone. He's only got 6 more months. Just leave him alone. He's going to reduce rates, bro. Just leave him alone. Now, but you have to understand where Trump is. We're not political. You have to understand, this guy's a businessman, right? And he sees the United States as a business, right? And we're not getting political. I really don't give a shit what your political views are. We're all about investments. But from an investor's point of view, we're paying $1 trillion a year. $1 trillion a year off of our debt, just in interest on our debt, right? A year. When if interest rates were lower, we wouldn't be paying that much, So I think that right there is why that's like his main focus is we're paying out all that money on just interest. So imagine your credit card. You have this massive credit card. Flip's got this credit card, $50,000 he owes to you name it, right? Capital One. And he's making minimal payments, right? Every month he's paying like $1,000 a month in just interest, It's like digging a hole. I'm not saying that Flip's doing that. Flip is good with his money, but I'm saying just paying in point of view, you're just digging a hole, right? Digging a hole. And that's what the United States has been doing for so long, right? So I think that's why he is so focused and he's been so on Jerome Powell about reducing interest rates because of the debt that, and at the end of the day, if you're an American, you're paying taxes, that's your tax money, essentially, that we're paying, right? It really is. Flip said, come get this clown. He just increased the debt $4 trillion. I mean, every administration is going to increase the debt, bro. Right? But yeah, the market's definitely not liking it right now. Definitely not liking it whatsoever. Great, bro. Got to do this while I'm streaming. Bro, every president adds on to the debt, bro. That debt has been there. How long? How long has it been there, bro? It didn't start 8 years ago. That thing's been there for a while. You know? Do some of them add more than others? I think we can come to that agreement, right? I think we can come to that agreement. But yeah, it is what it is. But the markets right now, hopefully, let me see if anything's shifted over here for September. Yeah, it did. Now we're at 14% of the markets thinking we're going to see 50%, a 50 basis point. I wouldn't be surprised, guys. Listen, what do we have? 12 days? 12 days until the Fed meeting. I wouldn't be surprised if this kind of fluctuates, where maybe we'll see like a 30, maybe 40% of investors are thinking that we're going to see a 50 basis point or more coming up in 12 days in September, versus, maybe 60% of the markets thinking we're going to see maybe a lesser aggressive Fed of a 25 basis point. We'll have to see how it goes. I mean, the fact is that we only have 12 days, less than 2 weeks until the Fed meeting. So we'll see how this plays out. Well, we were doing great. Right? We were running up, and now you can see we have come down. We're at $111,100. Nice little dippy. So we'll see how this plays out. Obviously, I'm looking to see where we have some liquidity lined up right now for the 24-hour. Let me pull up 48. Yeah. Flip, can you message Trump and just tell him to cool it, bro? Just be like, bro, just cool it. I understand your frustration, but dude, it's causing a sell-off in the markets. You really are. And you know what? I was going to talk about how we broke out of this channel, right? We broke out of this channel, even though we've done it before, but we've been kind of sitting in this channel, and I was going to talk about, we're doing great, we're breaking out of this channel, and then boom, we broke right back into the channel. Because as of earlier, we were looking pretty good. We were actually looking like we were going to find support above the channel, which would probably give us a nice little move towards the upside. But we have a nice, beautiful 1 hour candle down into the red. So it is what it is. Nothing that we can do about it. It is what it is as far as that. Let's jump into some news. We'll keep it moving here. So stablecoin reserves on exchanges hit record $68 billion as Binance commands a 67%. So stablecoin reserves on centralized crypto exchanges have reached an all-time high, climbing to $68 billion in early September, according to the latest data from CryptoQuant. This latest progression shows the growing role of stablecoins in global crypto markets, providing both liquidity and reliable bridge between fiat and digital assets. So what they're basically saying is that, because remember, we always cover the stories, right, about Tether and really Tether a lot. It's usually the ones that are announcing that they keep printing, another $1 billion in stable coins. Why are they doing that? Because every stable coin that they have is technically 1-for-1 for the US dollar, right? So every time you hear that Tether just printed another billion, another 10 billion stable coins, what does that mean? Well, that means that the demand for stable coins keeps increasing, right? Because they have to keep that pegged obviously 1-to-1. So with that being said, we're getting a lot more demand for stable coins, right, on central exchanges, which is great. That means that there's a lot of money that has been coming in. What doesn't necessarily mean that it's going into any particular projects, but it just means that a lot of people are basically converting their US dollar over into stable coins, with the indication that most likely, because people aren't just going to go, I have a $10,000 in the bank, I'm just going to transfer it over to USDC, but I'm not going to do anything with it. No, usually they're swapping, right? They're going to swap that USD over to USDC, right? The stable coin, because they're probably anticipating either sending it over to some kind of DeFi wallet, but essentially buying something with it, right? We're seeing the demand for stablecoins has been steadily increasing. Binance obviously holding the most right now. 67% of all stablecoins are on Binance right now. Obviously, Binance being the biggest exchange. But again, this is nothing but positive because that means that the demand for people swapping over USD over to USDC is increasing. A lot of that money will eventually, that's going to be the money that's probably going to FOMO in, if it's not already, either in or FOMOing out. A little brutal candle right there, bro. NASDAQ puts $132 billion crypto treasury rush on hold with the surprise vote rule. So NASDAQ will require shareholder votes before stock insurance is used to buy crypto. Strategy shares fell on the news but have clawed back 3% in pre-market trading. The added checkpoint lands directly on a fast-growing playbook in which public companies sell equity or convertibles, then purchase tokens on their balance sheets. The review complements exiting listing standards. NASDAQ's Rule 5635 already requires shareholders' approval in several situations, including private placements that reach the so-called 20% threshold on certain change of control or acquisition structures, as qualified in the exchange rule text filed with the SEC and related guidance. Did you guys understand any of that? Because I completely did not. I think that was a little bit over my head on that, but I think they're going to simplify, and I kind of know what's going on here with NASDAQ. So we'll read on. So NASDAQ's enforced arm also emphasizes its mandate to police compliance with exchange rules and federal security laws. The timing matters. A surge of crypto treasury pivots reshaped small cap capital markets this year. Architect Partners track 184 public companies that have disclosed plans to raise more than $132 billion for token purchases, with many listings on NASDAQ. The wave spans assets such as Bitcoin, Ethereum, Solana, XRP, and includes vehicles proposed built to hold or accumulate crypto. All right, so pretty much what it sounds like. And this kind of goes into the ETFs, right? You already have the ETFs for Bitcoin, Ethereum, obviously, right? But we know that within next month, in about 6 weeks, we're most likely going to be getting some more ETFs, most likely getting approved as far as like Solana and XRP and maybe a few other ones. I think those two are pretty much, I would say probably 80% going to be getting them. The point of what this is that NASDAQ put a pause to $132 billion that's basically ready to go into the markets via ETFs is what it sounds like, right? For security purposes. NASDAQ yesterday, I read an article where they were basically, they put out a statement on companies potentially buying crypto, kind of backtracking, scaring a lot of big companies in regards to, I forgot what the exact wordage was, but it was pretty much like, do you comprehend what you're buying, right? And these are these big companies that are on the NASDAQ. I think what they're doing, I don't know if they're like trying to go after crypto particularly, but what they're trying to do is a lot of these companies that are trading on NASDAQ, they're seeing the demand for crypto has gone up, right? And I think what they're doing is they're really making a company's not second guess, but really think twice if they're going to be putting a lot of this liquidity of their companies that are trading on NASDAQ into crypto due to volatility, right? And, you know, it was a hit in the market because if you notice yesterday wasn't a great day in the market, right? Even though we knew that today we were going to get those unemployment numbers that the markets were looking for, we had a little bit of a sell-off yesterday, right? I mean, we technically were around where we're at right now, given we were running. I mean, this is a freaking a mean candle that we have going on right now. But just yesterday, I mean, we had dipped back down to like 109, right? And this was because of all this going on NASDAQ. And then on top of that, ADP dropped some numbers yesterday as far as for the job market, which weren't technically, it was pretty much what we saw today, but for whatever reason, the market sold off on a weaker job market through ADP, right? So it's confusing. It's confusing because those numbers came out yesterday. The markets kind of did not like it. They sold off. Then we get pretty much the same numbers through the Feds, and you can see the markets liked it, started running. Now we're seeing a massive God candle towards the downside because Trump is tweeting about Jerome Powell. And every time he does this, when he starts coming after Jerome Powell, the markets, for whatever reason, they start selling off. It stinks. But the point is that with this, you can see there's a lot of money that wants to go into the crypto space via ETFs. Basically, it's sitting there $132 billion. NASDAQ is putting in kind of a little bit of a scare to the investors, basically saying, are you sure you want to do this? Are you sure you want to invest 20% of your capital into these crypto ETFs? I mean, I don't know. I don't know what to say there. Obviously, we don't want to see that, but it's good to see all that money piling up, and I'm sure a lot of that still will make its way into crypto at some point. Moving on, the U.S. labor market plunges again as unemployment surges to 4.3%. And this is what we were talking about earlier. So in the post, basically outlined only 22 jobs were added in August, 22,000 jobs, which is crazy because a country of 360 million people plus 22,000 jobs being added in August is insane. Absolutely insane. This is what we've been waiting for. And again, we're not going to get political, but if you are thinking, this happened all in a month of these weak jobs. This has been happening, and this has been basically a snowball effect in the last few years. This has been coming, right? And I know you're like, no, the job market's been great the last few years, right? Well, we don't really know. These numbers, I truly, even before Trump fired that lady, even before, remember, I used to always be like, I don't believe these numbers, right? And this is not going against any, political party or anything like that. It's just any of these numbers. Even if the numbers started jumping right now and they were looked fantastic, I would be looking at them like, it just doesn't seem correct. These numbers, they look right. They look right because out there, if you are, part of the 4.3% of people that do not have a job right now, which is probably a lot higher, I see it on YouTube all the time. I'm always watching these videos, and these people, it is brutal out there. Where these people are like, I applied to 700 companies and haven't got one call back. I have a master's in this and that, and I have a bachelor's in this. These are educated people, and they can barely find anything, right? So the job market right now is cooked. It is cooked right now, and I'm looking at these people like, damn. You should have had, I'm sure that maybe if you have masters and stuff like that, you're probably intelligent and you probably have investments, but you're looking like the people that are in crypto that are doing really well. I'm sure people that bought Bitcoin during the bear market, 2 years ago, if they're not looking for a job, right? People that have done really well in their investments, S&P's hitting all-time highs and stuff like that, they're probably not looking for jobs, But most people, they live in this tunnel of the only way I can make money is I have to clock in and I have to work for a company, right? Those are the people that are looking for a job right now. Those are the people that it's brutal. It's brutal right now. So let's see here. So unemployment shot up to 4.3% according to the Bureau of Labor Statistics. This slowdown piles on the earlier week reports and makes a rate cut by the Feds almost a done deal later this month. And that's why we've seen, like I said, it's not a matter of how. It's not a matter of if we're getting a freaking cut. It's the matter of how much of a cut are we gonna see, right? So let's hear July's job gains got revised up by just 6,000, bringing the total to 79,000. But June's picture got worse after BLS slashed that month's numbers by 27,000. Turning it into a net loss of 13,000 jobs. The pattern is brutal. And let me backtrack. This right here is why Trump is actually going after Jerome Powell. This right here makes sense. So if you guys understand interest rates, right? The lower the interest rates, the more money is out there circulating because it's cheaper to borrow money, right? A lot of these companies, people that open companies, right, that employ people, they are doing it usually off of federal not grants, but federal loans and loans from their banks or whatever the case is, wherever they get the money from, right? Right now, it is the worst time to be doing that because your overhead, not even talking about what you're selling, where you're located, but your overhead, right, is very high because you owe back so much on that debt because of interest rates being so high. So the point of what I'm getting to is whenever there's high interest rates, usually the job market it's brutal. It really is. It's brutal because big companies are trimming the fat. They're not hiring. The small companies, right? Mom and pops, there's not a lot of companies being started because it's hard for them to get loans, right? It has a snowball effect across the board. It really does. Across the board with interest rates being high. This was the point of them increasing interest rates. Remember, this all comes, like I said, this has been a snowball effect unfortunately, from COVID. All this, because remember, they put out all that money out there, right? Everybody, a lot of people lost their jobs because of COVID, and then jobs came back, but there was all that money floating around and your goods for anything. Remember, we were at 9% inflation. Gas was at all-time highs. We've never seen gas as high as we did 3 years ago. Keep that in mind, right? And all in all, it just was a snowball effect where it was just harder. Housing increased because more people were buying homes. Maybe they couldn't afford, but the demand was up, right? The point of what I'm getting to is with all that demand, the feds had to cool that down dramatically. And the only way they were able to do that, and also tech companies went out and hired more than they should. And that's where we're seeing all that money. We're seeing all the unemployment coming from. AI and tech companies either outsourcing or not needing the position anymore due to AI. They're reducing their workforce by the thousands. Like every day I'm seeing, yesterday Salesforce, right? Big tech company laid off another 20,000. That puts it at like 100,000 in the last year that they've laid off, right? Google, Facebook. I mean, you go down the list of all these, and then also the feds, laying off a lot of people. The point of what I'm getting to is right now, it's brutal out there. It's built up, and this has everything to do with interest rates being high. All of it. It all intertwines, and it all has something to do with it. And that's why, and like I said, Trump is trying to run this like a company, and right now the company looks bad, right? The job reports, you're seeing the job reports down like crazy. It looks bad. We're paying all this interest in debt. It looks bad. Everything looks bad. So this guy right now, he sees that. He wakes up today. He sees what's going on, and who is he going to attack? Jerome Powell is going to be the one that's in the crosshairs because he's like, bro, reduce interest rates, and that's why we're seeing, holy crap, this God candle towards the downside because Trump is currently attacking Jerome Powell on social media. And it all comes down to this right here, right? These weak job numbers, and you can go down the list of everything. So, Jay, what's going on? What is going on, guys? This was going to be a very bullish stream, right? And it just turned into now it's like, holy crap. But we're going to be fine, guys. We're going to be fine. We're going to be good, guys. So Trump fires BLS chief as new job data adds fuel. I wasn't real big on all this because it just doesn't look good. As far as him firing, he fired that commissioner that was basically putting out the numbers. I don't know. I don't even really want to read into it, but you're seeing, I don't know if these numbers that came out today are still part of her, her position, right? Because she just got fired, I think, last month. I don't know, but regardless, and it's not hard to go out there and see. Go talk to people, right? It's rough out there. It's rough out there. People that have a job and they're not happy, they're still not leaving their position because they know they probably aren't going to find a job for a while, right? And then people that are unemployed, if you weren't in investments and you didn't plan accordingly, you're out there freaking, fighting air because it's, you're fighting 10,000 other people that are probably more qualified for that freaking management job at McDonald's, So it's just like, it's brutal out there. It really is. And my heart goes out to all those people out there. That's why we're here. That's why we invest for financial freedom. And like I said this before plenty of times, financial freedom doesn't necessarily mean, oh my God, I don't have to work anymore. But financial freedom also can mean, to some people, you have that $50,000 cushion, you have $100,000 in the bank, you have $20,000, where if you do end up getting laid off, or you're one of these people that, that it's hard to find a job, you have your investments, right, that you at least can fall back on, and either sell them, or they've done really well and you're sitting on a lot of dry powder. So you're a year ahead right now on your bills, and you don't have to necessarily be as stressed out as a normal person that just sits there with their head down and goes to work, 9 to 5. You're never going to come up in life, in my opinion, off of a 9 to 5. I mean, I really don't. I think they're good for foundation, but as far as ever actually having financial freedom, maybe you'll get financial freedom. You will. If you work till you're 65 to 70 years old, those 5 to 10 years that you have left in life, that'll be your financial freedom. We'll give you 5 to 10 years, right? But you got to give us at least 50 years working. Doesn't sound like a good deal in my opinion, but so meanwhile, there has been a spot for slightly better news. The household survey, which is more volatile but also more immediate, showed an increase of 288,000 people employed. But it wasn't all good. Unemployment still rose by 148,000, and the labor force jumped by 436,000, which is what pushed the jobless rate higher. The labor force participation rate also ticked up to 62.3%. Another metric, the broader unemployment rate, which counts people who've stopped looking or are working part-time when they want it full-time, climbed to 8.1%. That's the highest it's been since October 2021. It rose by 0.2% points just this month. So, yeah, I mean, we won't kick a dead horse. It's brutal out there, guys. It really is. It is brutal. Let's look at the hourly. Look at that. Everything turned freaking red. Crypto James, bruh. Where have you been, bro? Hope everything's good, bro. Hope everything's good, man. I miss you, man. I really do. That's an OG right there. That's an OG right there, bro. What's going on, brother? I hope everything's good with you and the fam, dude. I missed you, man. I'm still on the Discord. We're still there. Hit me up if you're up there, all right, bro? We'll talk. Mr. Tanker said, what the happened, bro? Well, I mean, what really happened, let me see if we can pull it back up, but from what I'm seeing, this is pretty much what happened. Is we got a tweet, Mr. Tweety Pants over here, Mr. Trump, basically he tweeted out, he said that Powell should just lower rates long ago. He said, Jerome, Mr. Too Late Powell should have lowered rates long ago. As usual, he's too late. And right after that post, which is crazy, there has to be something else going on, but right after that post, the market started to take a shit. They're piling on. It says, just in, unemployment rate for ages 16 to 24 raises to 10.5%. My daughter is part of those. She's 16, and she doesn't have a job right now. But no, she's doing great in school. I told her, I said, next summer, you're getting a job. I was like, there's no question about it. She's taking college classes right now and high school, so she's been like overwhelmed with her school and stuff like that. So I was like, you know what? I'm not gonna sit there, and I want her to focus on school, obviously. But I explained to her, I was like, you're gonna be working next summer, and I think she's happy about it because I still pay all your bills. You're just gonna save a bunch of money. I think it's a good. Taker said the job numbers. No, the job numbers did great. The job numbers did great as far as for what we're looking for. They came out. It was previous 4.2%. It came out to 4.3% for unemployment, and 22,000 jobs were created. Basically, a very weak job market. That's what the feds are looking for to reduce interest rates, right? If today when it came out and unemployment came down, right, which is good for the economy, but bad for investments, because what happens is the feds, the reason why I just went through it all, I'm not going to go through it again, but the feds are looking for a weaker labor market for them to start reducing interest rates. I think at the end of the day, what you have to understand is that the reason why the feds increased interest rates to begin with, right, was because of all the stimulus checks and all the money that was circulating in society, right? The demand for goods went up. You had people walking around with thousands of dollars that probably shouldn't, right? Or maybe they had extra thousands of dollars now, so they were buying everything, anything that they don't need. So the demand went so high up. On top of that, you throw in, there was a lot of, stuff going on as well, like what is it? I just got a brain fart, but like the goods coming in. Remember, there was a lot of port issues and stuff like that. It just was a big snowball effect that's like, it's just continuously going, right? Well, the feds had to, because all that drove up prices for everything, right? So the feds had to basically aggressively increase interest rates, but we haven't seen them reduce them in a while. So now the labor market is it's very weak because there's not a lot of jobs being created. A lot of companies aren't starting up because they can't take loans out in the bank right now. On top of, we're going through a big shift in the labor market as far as like AI and stuff like that. AI has replaced a lot of people. I don't know if you guys, have you called? I had to call insurance the other day for my daughter for vision, and I'm on the phone with a robot for 30 minutes, right? And I'm just like, please, operator, give me a representative. They're like, and they just try to find any, like, because the robot was like, I can help you with anything. I'm like, I don't want to talk to a robot. I need to talk to somebody, and it's finally, it got to this, and that's what we're at. There's the job labor market. AI is taking it out a lot on top of everything else, which technically would be a good thing for risk on assets because the feds are supposed to be reducing rates. But unfortunately, we have other things going on as of today. Like I said, the markets they just do not want to see the president and the top of the feds, at it. It just doesn't. It's not a good look. It's not a good look. So yeah. Look, everybody right now, what the fuck is happening with Bitcoin right now? A lot of people are like, what the fuck is going on? Because today was supposed to be a solid day. And the only thing I can think of is this right here. This just in, Bank of America projects federal rates to cut interest rates twice this year. Yeah. It is what it is, guys. I think at the end of the day, nothing changes with my strategy. We know, we go back to, where are we at here? We go back to, oh man. Hold on here. We go back to the monthlies, right? And we look at this, and historically, I've said this 1,000 times already. I feel like a broken record. September, for whatever reason, right? You go back to 2021, whatever was going on in that time, we don't even remember, right? But it tends to always occur during September. It's like that last big shakeout before the markets really run. It's and if you look at this, for 6 consecutive years for September, even during bull runs, was in the red. So we were anticipating that this month was going to be red. What kind of threw a lot of people off was that August, not always, but tends to be a solid month, particularly on bull cycles, right? So 21, 17, and you go 2013, they were all in the green. This time around, we actually closed pretty solid in the red, 6.5%. So it's like, the market, I think right now people are coming from August. They're like, well, maybe we're going to get a good month in September. But a lot of old school monies like Septembers are never usually good. So that's why I think no matter what, I think until this Fed rate comes towards the end of this month, the market, we're going to be pretty much in the same situation where Bitcoin's kind of trending around same numbers. Maybe we see dips here and there. Maybe we see little moves towards the upside, but they're all short-lived. If you really think about it, any really move that we've had has been short-lived. We let's just, you go to some, for instance, some of these moves where, you even go back to like the end of August, right? We dropped down to like 111. We ran up to those all-time highs. We dropped down to 111, started to look like we were moving, ran up to 117, dropped down to 108, ran up to 113.5, feeling like we're going to move, drop back down to 107. We just saw that move up to 113.3. It's just like you can see that we're still in this downward trend as of now, right? We're still in this downward trend, but every time we're in a downward trend, what usually follows, right? We don't know how long the time frame is, but what usually follows is some kind of a move towards the upside, usually an explosive move towards the upside. So strategy doesn't change for me. I'm still going to be acquiring and accumulating, the projects that that I'm very bullish on. This just gives me a little bit more time for me to continue to add to my bags as far as my particular projects. Looking at DeFi right now. Let's see here. World Liberty Finance. This is Trump's project. Man, yesterday, members, we're gonna go over this. I've been longing and shorting the shit out of WLFI. I'm gonna on member stream. I'm gonna show you guys where I'm actually doing this on this platform that just popped up. So simple, and I guarantee you guys already have a wallet set up, so you guys can be. I'm not encouraging any leverage trading, but if you're looking to maybe jump in on some leverage trading, not just for this, but a whole spectrum of freaking projects, we're going to talk about that this weekend on our members only stream. So, but I did catch, let me see here, let me go back. I did catch the bottom of that project, World Liberty, when it dropped down to like 16 cents, and I ended up selling off when it jumped up towards like 19 for like a solid like 60-70% gain within like an hour. It was pretty dope. I didn't realize we were going to move up that fast, but we did. That was yesterday. Ended up closing that out real fast. But other than that, across the board, nothing really too big to run home and tell mom about as of now. ZBCN kind of trailing around. A lot of these projects are kind of doing the same thing. They're just really just consolidating as of now. Right now, not a bad little buy zone for ZBEC, in my opinion, now that it's below 4. I've been, slowly but surely buying. I'm sitting on a lot more than I thought I was going to be sitting on ZBEC and for Mask as well. Same thing. If you see, look at that. Almost looks identical. Just consolidating, right? So for Mask, I've been just adding. When we drop down to around 69, this 69 level, that's around this level right here that basically holds as support. Anything below that 69 for Mask, I've been just accumulating, right? Just been accumulating. Freaking $7 million market cap. Over 30,000 people holding this project. It's poised to run. Flip said he passed on which one? Oh, the Trump coin. I figured. I don't want anything to do with it, honestly. Like I don't you know how I am. I don't buy any of these projects that are like promoted. I don't give a shit who's promoting it. I don't care if Taylor Swift comes out and she opens up a Swiftie token. I'm staying the hell away from it unless I get inside information that she's about to drop it, and then I can buy in as it drops. That's like the only, but I wouldn't. 2 hours, I always end up stumbling across these Trump tokens and shit like that after they've run up, like $7 billion. I'm like, I'm not buying that shit. The hell? Literally, that's the definition of exit liquidity. That's what you would be. So, I'm good on that one. I'm good. See a red now on the hourly. The weekly doesn't look bad. Meme core still holding 229%. Pump still holding 31%. Story up 30%. Bitcoin Cash holding about 14%. Matic 14%. Not looking bad at all for movers. Maker actually holding 15% as well. So I mean, you have some projects that are not doing bad, but I mean, if you look across, and if you really, this is the weekly. Other than Pyth, which had a massive run up, we talked about this. Other than Pyth, you look at Radium. I don't know why Radium particularly is down 10%, but across the board, I mean, even though in the weekly we're in red on some of these are the top 100s, I mean, look at this: 5%, 4%. Solana's down 3%, HBAR 4%, Crow's down 6% because it was moving up a little bit more than others, right? But I mean, across the board, I mean, it's not terrible. It's not terrible. Like I said, I'm not at all bearish whatsoever as of right now. Right now is not the time. Look at that drop on Ethereum. God, I wish I could have opened up a long. If I would have been paying attention. I know it's hindsight 2020, but an opening up a long right here would have been freaking amazing. Honestly, even though it hasn't moved up much, but a nice little long that take advantage of this volatility, I would have easily just opened it up like a nice 50x and closed probably. That was a nice little move. S&P, everything. S&P's down 0.7%. Nasdaq's down about 0.5%. Dow Jones is down about 0.8%. The VIX is up. How's gold? Gold's up. Gold's been killing it lately. Which I said, guys, we really don't want to see. Really don't want to see gold moving up because that ultimately is taking money from riskier assets. Looks like gold made all-time highs at around 3,600. Let me mark that. $35.97 for gold. Yeah. Hopefully this weekend's not brutal, guys. We'll have to see how the market closes today. I wouldn't be surprised if the market, starts to maybe pick up. S&P made a new all-time high yesterday. I wouldn't be surprised if the market tries to pick up before close. That'll be a good sign. If we see a sell-off before close, that might set us up this weekend for a brutal crypto weekend. So we'll have to see how this plays out. But again, like I keep telling you guys, I'm not worried, right? I'm not worried. And I'm not just saying this. You buying or selling isn't going to move the market, and it doesn't do anything to my pockets, right? So me saying this is truly, my opinion and what I believe. But we've seen this how many times, guys? September tends to be a difficult month. It really does. It tends to be a difficult month. But look at the returns after, right? You go to 2021, look at the returns after. We've talked about this. This 40% doesn't even give it justice. As far as what actually happens, or what's happened for Bitcoin particularly. If I go back real quick, let me just give you guys some hopium real quick, right? We're on the daily. We go to September of 2021, right? Because we're going to go back to where the 4-year cycle is. Where is it? Well, let's see. There's September. Look at this too. This is literally the day we're on right here, guys. Holy shit. This is a little scary. September the 7th. Okay, so 2 days. Look at this. This is, I always tell you guys, this time was a scary time in the market right here. But if you look from the top of where we're at the beginning of September to the bottom, right? 25% dip in just Bitcoin. We're not even talking about altcoins. 25%. Ethereum did 28%, right? But this is what I want you to focus on. The time frame, right? So this was the 7th of September when we saw this massive daily candle drop down, right? When we finally bottomed and we started moving up, This is the 29th. So what is that? 22 days. Pretty much 3 weeks exactly, right? It was bad, but look what followed. Look what followed, right? And something similar, if we were to go back to 2017, happened. September tends to be a brutal month, particularly during bull cycles. It tends to be a brutal time in the market, right? And I look at it as it is basically a shakeout. It really is. What else can you call this right here? What else can you call this other than some kind of a shakeout? Because look at that. Shook out all the weak hands, and those who either held or looked in the face of this dip was like, you're not scaring me. I'm going to keep adding to my bag. Look how they were rewarded. This is when, and this right here, this wasn't just a pump right here. This was altcoin season right here. I'm going to type that in. Actually, no, because we're not even going to come back to this chart probably. I'm going to lose this. This chart will go into the 1,000 charts that I have out there. But this right here was basically us building. This was our parabolic stage going into altcoin season. This was altcoin parabolic 10x, 20x. You're looking at Lambos right now. You're looking at Ferraris. You're like, bro, I'm about to buy a freaking mansion. Things are just, I'm the best trader in the world. This was this period right here, right? We had to go through this to get to this. All right. Just keep that in mind, guys. Keep that in mind. And that's what we're going through right now. It's literally what we're going through right now. September tends to be a brutal month. Let's see here. How big has the dip been so far? From the top to the bottom. So far, we've seen about a 14% drop so far. Now, it doesn't necessarily have to be 25% exactly, right? This could have been the drop. There could be more. Can you handle a 25% drop? Can you? 25% from where we're at would put us at 92,000. $92,000. You know how many people will freaking sell off at losses because they're so emotional? They're so emotional. Fine with us, right? Because you know what? If we were to do something like this, oh man, I'd spend a lot more than I probably spend a lot more than I would anticipate eating that dip up. Because I would look at that as a freaking gift from above. Really. What was this last dip right here? 32% dip right there. Holy shit. I was at the beginning of the year. I didn't even realize we dipped that bad. 32%. It's crazy. And look what followed. Look what followed, guys. Cocktoshi, what's going on, bro? Flip said he's hitting the gym later, guys. All right, bro. Well, guys, listen. I really wanted to have a very so bullish stream here, and listen, things are still very bullish. It is what it is, right? I think the main thing that we're going to take from this, before you leave, hold on, is just be strong. Don't get manipulated on repositioning your bag or selling off and running home to mommy or anything like that. Just stay strong. Let everything play itself out, guys. I can't tell you how much we've gone over, especially my members. I swear, my members, you guys should be the most prepared because we have been going through this dip for the last 8 weeks. We have been saying this was going to happen. This tends to be what happens. While we were at $125,000, I'm literally saying this shit 8 weeks ago, right? Don't get suckered into selling weak hands, whatever the case is. Just be strong. Know what you got. Know where we're headed, right? And just let everything play itself out. If you're not forced to sell, obviously everybody's got different financial situations, and I'm not giving out financial advice whatsoever. But I understand some people come to me and they're like, bro, I had to pay my bills. I understand, I understand. Everybody's got different financial situations, right? But for the people that are using money that is just sitting in their account and they don't have to sell, don't get scared, because you're going to sell off and then you're going to be FOMOing back in after the big bounce of whenever it comes, and you're just going to be sitting there losing out on a lot of gains. That's what I predict. It's my opinion. Obviously not financial advice. Just let it play out. All right, guys. With that being said, keep your heads up. We'll have a great weekend. Members, we're going to be here back tomorrow. I don't know what time, but we're going to be back here tomorrow because we got to sit down and talk about some things. All right. With that being said, guys, have a great Friday. Go have a drink on me. Don't drive. Just have a drink. Get an Uber. We'll be good. Hit that like, and I'll see each and every one of you guys this weekend. All right, guys? Thank you again. All right, James. Hit me up, bro. All right. All right, I'll see you guys.